everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Thank you for coming back for another day of stock analysis. Today we will start with the 10-year Treasury and we will go into Tesla analysis as well as the broader stock market. I will also share with you guys some tips about Roth IRA conversion as well as a Roth IRA for your children. If you are interested, please stay until the end of the video. If you are new to my channel, please consider subscribing. I am a growth stock investor and a trader, and I'd love to share with you my investing and trading journeys. Without further ado, let's get right into it. So before we talk about the stock market or Tesla, let's take a look at TNX, which is the 10-year Treasury index. Here in front of you is a weekly chart for the TNX, and it is flagging a major weekly bull flag, which also signifies bullish momentum. Now, a couple weeks ago, it seems like it made a double top that it would dip further. Unfortunately, it didn't build a head and shoulder. Had it stopped right around here, and that would have been middle of August. If it stopped around here and then dropped, then that would have been a head and shoulder, and that would have been much better for the stock market. But unfortunately, it built a brand new flagpole, and it is now making its way to the body of the flag. Quite frankly, it has a little bit of a squeeze here on a weekly chart, which signifies that it could go up higher. This is particularly important because the rise of interest rate has added a lot of pressure on the housing market as well as the stock market. So it could fire off and get to the first price target, which is 49.35. I know this doesn't really signify any interest rate, but generally speaking, interest rate increased dramatically when the Treasury yield has been going haywire like this. So over the next couple of months, potentially through the new year into January and February of next year, we could see a potential major catastrophic hike in rate, not necessarily from Jerome Powell, because he's probably would do 0.75% every single time, but this could lead to fear in the market. The lender would change rate unreasonably, and it adds a lot of pressure into the rest of the market, stock market and real estate market alike. Going back to the daily chart for the TNX here, and I'm analyzing it as a regular stock because it has the same technical analysis across the board. Right now, it is above 50 days SMA and well above 200 days SMA, which is incredibly bullish. It is also on its way for a weekly bull flag. So once again, this is very, very bullish. I think that if it hits to 42.66 over the next couple of days, which was the highest point about 10 days or so ago, it could fire off to the first price target, which is 49.35. Long story short, I think now is the time that the stock market will continue to be in the red. Compared to where it was about 2 months ago or 3 months ago. It is still an opportunity to buy because we don't know at which point the stock market would turn. It usually has the opposite trend with the TNX, but for right now, be prepared for more pain. And in the short term, it is a buying opportunity. It is also a good opportunity for any kind of Roth IRA conversion. So what is a Roth IRA conversion? So in a nutshell, a Roth IRA conversion is basically you're converting your traditional IRA into a Roth IRA. Sometimes this is called a backdoor Roth IRA. And the reason that it is important right now in particular is because the stock market has been going down drastically. If you have found yourself having unrealized loss in the hundreds of thousands or 20,000, 30,000, 50,000, that is a good time to convert because you would pay less in tax. The amount of IRA money, traditional IRA money that you convert will be subject to income in the year of conversion. But then after that, you will not be taxed on any growth on the remaining amount after conversion. In other words, let's say there's a simple example. You have $100,000 in your traditional IRA account. you are converting 100,000, which probably 3-4 months ago or a year or so ago, it could have been 180,000. It is now only 100,000. You will convert 100,000 into a Roth IRA, and your income for the year would only be 100,000, as opposed to be 180,000 that you would have to pay tax on had you converted when the stock market was high. The moral to the story is that now, with the unrealized loss that you generated, you just converted the principal of about 100,000 in that example over to Roth IRA, and you have way less tax liability. Assuming you would be willing to pay tax on that converted amount, now your remaining balance, whatever that might be, will be growing tax-free. My general philosophy is that if you ever want to convert your traditional IRA into a Roth IRA, you want to pick the time when the market is low to have the least amount of taxable income possible in order to convert, and then that remaining balance will grow tax-free. And if you are like me, who strongly believe in Tesla, the remaining of your money, if invested in Tesla, could grow tax-free. So today, if Tesla is in the low $200 a share, imagine if it grows into $2,000 a share in the next 5 to 10 years, or whatever that future time frame might be. All of that gain will be tax-free. So it is a very important planning technique if you are at all interested in Roth IRA. Of course, the short-term pain is that you might have to pay tax on the income recognition for the year that you recognize for the year of conversion. Some of you also asked me about kids' Roth IRA that I briefly mentioned in a couple videos back. The way that children's Roth IRA works is that you as a parent can set up a custodial Roth IRA account for your kid and allows for the fund there to be grow tax free. The limit to set aside Roth IRA money for the child is, of course, the maximum is $6,000, but up to the amount of income that your child or children earns that year. So your children would have to have earned income in order to set aside Roth IRA money, and his or her income would have to be under a certain limitation, much similar to your income limitation. For the most part, unless your kid makes over $150,000 a year, I think their income would be under the limit. Another planning tip is that if you have businesses where you can employ your children to do some work for you that has business substance, you could pay your child, thereby allowing your child to have earned income that will allow him or her to set aside money for Roth IRA. If your children is a teenager, for example, they can help you with bookkeeping. They can help you with doing a lot of administrative filing for your business. If your children are much smaller, there's always possibility where your children could become models for your, in my case, short-term rental business. I would use my children to be models for my Airbnb homes that is advertised as homes that are friendly to kids and family. That way they could earn their earned income, thereby allowing the homes to have better marketability with families on vacation. Here's the daily chart for Tesla. It is now 1:20 Pacific Standard Time or 4:20 Eastern Standard Time. The market has closed and Tesla ended today at $215.31, with the volume was only 73%, which is way lower than average. The buy volume is about 50% and sell volume is the other 50%. So far, Tesla has been operating at the support level, which is right around $215. One could say that this is multiple bottoms. That means that Tesla could potentially bounce. Another potential way to view it is that this is a bear flag, which could signal further downturn. Right now in the current market, it is really difficult to predict on a day-to-day level what Tesla or any other stock would do. For part of the reason why you don't see my video as often as before is because it's not as completely volatile. It is fairly predictable that the market is still on a downtrend and we are in a bear market across the board. Now, when it comes to chart analysis, it gives us a certain amount of predictability, but it is definitely not as relevant as when the market is extremely volatile on the upside. The 50 days SMA right now is $258, and the 200 days SMA is $276. If you recall, there were a time where the 200 days SMA and the 50 days SMA sort of collide here, but now it's almost like a mini death cross where the 50 days SMA is now well below the 200 days SMA. Let's take a look at Amazon. The stock has been beaten up pretty badly after earnings, and right now it is basically in free fall mode. The last 3 days, the volume has been more than 100%, almost 200% each of the last 3 days, and predominantly sell volume. So this is the daily chart, and Amazon is in a complete oversold territory. It is majorly oversold. I do think that it is going to bounce, but the exact timing, we would not be able to know. Let me adjust the 50 days SMA here. So the 50 days SMA for Amazon is at 119. And the 200 days SMA here for Amazon is roughly 131. Not too long ago, Amazon hit a recent high of about 145 and then quickly retraced down to the low 100. And as of the last few days after earnings, it has gone straight down to well below $90. It is important to note that the earnings per share is positive to 28 cents per share compared to a few quarters ago where it had a negative earnings per share of 20 cents, and then before that it was negative $7.56. So for all intents and purposes, the company is doing better from a bottom line preservation standpoint, but there is the weaker outlook in the market, consumer confidence, and the looming recession fear that allows for consumer to retract spending, which directly affect Amazon, or at least the perception thereof. Amazon remains one of my biggest holding. In fact, it is my second biggest holding after Tesla, and I continue to buy the stock. Needless to say, it is not a very good picture in my portfolio right now, but I am committed to be consistent with buying, and we'll see what the future will bring. I'm not looking to liquidate the fund in the next 12 months, so I will continue to buy, and we'll see in the next 5 to 10 years. I'm very confident that Amazon and Tesla continue to be the top companies out there to invest in. Let's also take a look at Apple. Apple is probably an important player for the rest of the market. It has also been affected pretty negatively over the last few weeks. And despite a decent earnings, it did not fare very well after earnings. Once again, this is a matter of perception in the market. And Apple, despite very strong financial, I believe that consumer spending in a environment of recession will negatively impact Apple performance. So Apple ended today at $138.88, down over 4%. Today overall is not a good day for the market, whether it's the Dow Jones or the technology sector. That said, I think that Apple has a floor of about $134, give or take. So it does have a little bit more of the downside of another $4 to $5, but then it should bounce pretty strongly around $134. Let's also take a look at the weekly chart for Apple here. So weekly chart this week, Apple retraced pretty terribly. It has confirmed the multi-top chart pattern here. With these are the multi-tops, right? So 182 was a recent high, and right now it has been sitting pretty low. The lowest was back in around February in the low $110, $118. So yes, quite frankly, Apple has more room to fall. However, the strong support is around 137, and another one is around 134. So if Apple can bounce from these two levels, then it could probably get back to 140, 150 range. Apple is probably the last stock any investor would sell. So I do strongly believe that Apple could fare well in a recessionary environment. Although you do see multi-top, you could potentially see head and shoulder on this pattern as well. And Apple could fall as bad as around $117. if the head and shoulder pattern materialize. So there is a lot to be worried about in the next couple of months, but there's also an opportunity to buy that is probably the biggest opportunity to buy in the next decade or so. So this is it for this video. Thank you very much for paying attention thus far. If you find value in my video, please consider subscribing to my channel. Head over to my Patreon page and subscribe over there and be a member there. I will share a lot more information with my Patreon members about Roth IRA conversion as well as children's Roth IRA over there. If you have any questions or comment, feel free to comment down below and I'll do my best to get back to you guys. Thank you very much and I look forward to seeing you in the next video. Bye.